Gold is doing something strange in 2025. It's no longer trading like a metal and definitely not acting like a commodity. It's acting like a signal, a warning light, a message from deep inside the monetary system that most of the world has not yet decoded. Gold recorded the highest quarterly demand in history, 1,313 tons in Q3 2025, worth $146 billion, and hit a new all-time high of $4,380 per ounce. That number is not noise, it's a signal that something deeper is shifting beneath the surface. So let's break down what's really happening and where gold is heading next. Here's the truth nobody wants to say out loud. The current monetary system is creaking, not collapsing, but creaking loudly enough for central banks to hear it. Global debt has crossed $330 trillion. Real yields are slipping. Confidence in dollar reserves is thinning bit by bit. And central banks? They have seen this movie before. They are buying gold at the fastest pace in half a century. Look closely at the chart. Central bank demand in the last 5 years is the highest in modern history. China, India, Poland, Turkey each added more than 200 tons. Singapore, Japan, Thailand, Hungary, another 80 tons each. These institutions aren't diversifying, they're quietly fortifying themselves because they know exactly what happens when debt becomes unpayable, when currencies fragment, and when trust evaporates. Gold is the system's insurance policy, and the policymakers themselves are loading up heavily. Now let's talk about the part the media understates. BRICS expansion has brought Saudi, UAE, Iran, and Egypt into the same tent, countries influencing more than half of global oil flows. And every sanction, every currency freeze, every asset seizure has delivered one clear message. If your wealth sits in Western banks, it can be switched off. But gold cannot be frozen, cannot be sanctioned, carries no counterpart risk. This is why the East is quietly loading up. China, India, Turkey, the Gulf states, all adding month after month. These are not investment flows, these are sovereign survival flows, and the West is beginning to feel it. Look at this headline. JP Morgan moves its entire gold trading desk to Singapore. What does this mean? The world's largest gold derivatives dealer, leaving New York and London, choosing to operate from Asia. This is not a small operational shift. It's a statement. Because this is where the physical gold flows are. This is where the ETF demand is shifting. This is where the central bank accumulation is. This is where premiums are set. Gold's pricing power has officially shifted from the West to the East. Even Wall Street is quietly repositioning itself closer to where the future of gold will be decided. But nations aren't the only ones paying attention. Investors, quietly, slowly, are doing the same. ETF inflows are the strongest since 2020. Bar and coin demand is at 12-year high. Asia's ETF inflows are setting fresh all-time records in 2025. This isn't panic, this is not fear, this is preparation. A slow, steady rotation from paper promises into monetary metal. And it's happening every single month. Here's the part analysts in the West rarely talk about, because they don't know what to do with this information. Morgan Stanley recently reported Indian households own around 35,000 tons of gold. Temples and trusts hold another 4,000 to 5,000 tons. The RBI holds nearly 880 tons. Put together, India controls around 40,000 tons of gold, more than the official gold reserves of the United States, Europe, China, and the IMF combined. This is not just wealth, this is civilization level insurance. And here's the key that changes the global equation. India almost never sells gold. Every crisis leads to more accumulation. Every correction fuels more buying. Indian households act like the world's invisible price floor. Gold cannot crash because India will not let it. And that's a force Wall Street cannot model. Now contrast that with supply. Global mine production has gone nowhere for 15 years. No major discoveries, no new project pipelines, recycling is stagnant, demand is exploding, supply is flat. This is the recipe for a structural bull market. It happens slowly until suddenly it doesn't. A lot of people look at gold and say, $4,200 per ounce. That looks expensive. Maybe the top. But here's the truth. Based on official US CPI data, gold's real inflation adjusted peak from 1980 is roughly $3,350 per ounce. Let that sink in. And gold flipped that level in Q3 this year. This means something important. At $4,200, gold is not expensive. Gold is finally waking up. We are not at the top. We are at the beginning of the uptrend in real terms. And just when you think we've covered all demand sources, a new one emerges. For decades, gold demand came from central banks, ETFs, jewelry, bar and coin buyers. But now, a fifth category is forming: tokenized gold. Tether, the issuer of the world's largest stablecoin, has reportedly accumulated over 116 tons of physical gold. Online reports suggest this, although full audits are not public. But the number is not the interesting part. The goal is. Tether wants to tokenize gold, to turn it into programmable money, to make gold spendable, transferable, divisible, and usable 24/7. If they succeed even partially, regions like Asia, Africa, Latin America, and the Middle East could adopt digital gold as a practical monetary alternative to unstable local currencies. A new kind of demand, a new kind of liquidity, a new use case gold had never seen before. Gold as daily money, not just long-term savings. It's early, but the implications are massive. Now let's shift to the chart that ties everything together. After the 1971 Nixon shock, gold went from $35 to $875 in a decade, a 25x parabolic move. Then during the Volcker era, interest rates hit 20%. The dollar regained credibility and gold retraced to $250 by the year 2000. In 2011, gold peaked at around $1,920 and by 2015 it bottomed around $1,000. And now in 2025, gold has broken out of a 50-year consolidation box, exactly like the mid-1970s. The long-term Fibonacci regression shows the 78.6% extension aligns around the $10,000 and the 100% level opens a path toward $20,000 to $25,000 per ounce. These are not fantasy numbers. They are simply the upper bound of gold repeating its historical move under similar macro pressure. Here's something most people overlook. During the 1970s, gold rose 25 times across 10 years, but 2025 is a stronger setup than the 1970s ever was. Gold bottomed in 2015 around $1,000. It spent nearly a decade coiling under $2,500. Absorbing demand, compressing volatility, tightening supply. Here's the secret. The longer the coil, the more violent the breakout. 2025 is the breakout year. This is where technical momentum, macro stress, and geopolitical fracture all converge. In the 1970s, we had inflation, but today we have inflation, global debt, deficits, geopolitical fragmentation, and a shift of financial gravity from west to east. This combination never existed before. This is not a normal cycle. This is the monetary equivalent of tectonic plates snapping. And just when this coil reached maximum tension, the final trigger appeared. On December 1st, the Federal Reserve ended quantitative tightening. QT is officially over. Liquidity is no longer being drained from the system. And what comes next? Major banks, Bank of America, UBS, and others, are openly forecasting the start of massive QE in 2026. Not small, slow QE like 2010 or 2012, but big print QE. $40 billion per month focused on treasury bill purchases, pushing liquidity straight back into the markets in a world already drowning in debt. This is not an easing cycle. This is a monetary rescue operation. And here's the key. When QE begins from a position of record global debt, shrinking trust in treasuries, rising deficits, negative real yields, and a world already fleeing to gold, the repricing in gold won't be gradual. It will be sudden and steep, a violent release of a decade of compressed pressure. Exactly what the charts have been warning us about. This is the final catalyst, the spark that turns the coil into a breakout. 2025 is the year gold finally reclaims its throne. Not with noise, not with hype, but with truth. For more than a century, the world drifted into a dream, a world of paper promises and currencies backed by nothing but confidence. Gold's rise is the wake-up call, a reminder to a forgotten world of what real value looks like. Not a promise, not a policy, not a printable number, but something timeless, borderless, indestructible. And gold has been waiting for the world to remember. This is Market Velugu, Light on Markets.